Good morning. The markets ended in the red last week amid extreme volatility. The Sensex and the Nifty ended with losses for the third consecutive week, marred by political uncertainty, charges of scams and geopolitical tension. The Sensex shed 3% for the week and more than 9% or 1,972 points from intraday highs of 21,108 on the 5th of November. Selling was broad-based as BSE Small Cap Index fell 4.5% and Mid Cap 3%. All sectorial indices also ended in the red. The 30-share BSE Sensex closed at 19,136, down 181 points, and the 50-share NSE Nifty was at 5,752, down 48 points. Shares of real estate and FIs continued to fall over news reports surfaced that SEBI has initiated a probe into possible front-running and insider trading in shares of over 24 companies by entities and persons involved in the housing finance scam that is unearthed by CBI. LIC was down 11% and HCC fell by 20%. After the mayhem of last week, the market will look to find some stability. The bulls will try their best to put the bribes for loan scam behind, but whether they are successful remains to be seen. A mix of domestic global headwinds will continue to cast a shadow on the sentiments. The start today would be of cautious as Asian markets are indecisive. Barring Japan, all the other markets are trading in the red. US and European markets sold off on Friday amid growing concerns of the Eurozone sovereign debt issue. Meanwhile, European officials have announced a $112 billion rescue package for Ireland. The war of words between South Korea and North Korea continues and will continue to weigh on the market sentiments. US jobs report, Chinese manufacturing PMI and ECB interest rate decisions are some of the global events to watch out for. Back home, Q2 GDP data will be announced on Tuesday. Also keep an eye on the monthly auto and cement sales besides the latest trade data and manufacturing PMI. Use any rebound to get rid of the questionable stocks in your portfolio. Get into quality ones with sound fundamentals and earnings visibility. Any close below 5,690 levels could aggravate further selling pressure in the market. However, as the recent decline has retracted almost 38.2% of the entire move up beginning from 4,786 till 6,284, bounce back remains a possibility. It will be confirmed only after a close above 5,900 levels. Foreign exchange reserves dropped by $330 million to $298 billion in the week ended the 19th of November. India's crude oil output rose 13.7% to 3.3 million tons in October 2010. The RBI multi-caping the bank's investments in debt schemes of mutual funds to prevent frequent chaos in the money. Steel prices are likely to increase by Rs 1,000 to 2,000 per ton in the next 3 to 4 months. GDP growth for financial year 2010 and Q1 of financial year 2011 will be revised upwards following the upgradation of the WPI index. The government agencies import urea at higher prices this fiscal. DoT may penalize new telecom companies for lapses in network rollout. Reliance Industries plans to boost gasoline and diesel exports by restarting units shut for maintenance. Coal India is likely to withdraw from talks to acquire a mine from Masai Energy. ONGC and Oil India have joined hands with BPCL and IOC respectively to enter city gas distribution business. Aditya Birla Minerals, a 51% subsidiary of Hindalco, has started a process to revive Mount Gordon copper mine in Queensland, Australia. BHEL may offer a minority stake to a third partner in the joint venture with SAIL. HDFC chalks out a major foray into education. M&M to acquire British Telecom's 5.5% stake in Tech Mahindra for around $94 million. 6 to 7 companies are likely to bid for Power Grid's tender to lease out its tower infrastructure. Deal between Bhushan Steel and Japan's Sumitomo Metals has got stuck due to differences over valuation. Tata Power has decided not to take part in the country's first major solar auction. Shipping Corp FPO price band fixed at Rs 135 to Rs 140 per share. GVK Power and Infrastructure, through its wholly owned subsidiary, has announced that it has emerged the successful bidder for the 6-laning tollway road project in Gujarat. Claris Life Sciences reduced the initial public offer price by 20% and extends it by 3 working days. The IPO of Moil was subscribed 76% on the first day of bidding. Huneng Power seals a deal to buy 50% stake in Intergen owned by GMR Group. Videocon Industries, along with Bharat Petro Resources, a subsidiary of BPCL, has discovered gas in the Lagosta well in Mozambique. Steel Stripes and Wheels in advanced talks with Korean company to sell 4.25% for around $10 million US. Star India Holdings, part of News Corp, has increased its stake in Tata Sky, its DTH joint venture with the Tatas, to 30% from 20% recently. Moving on to the recommendations, the technical calls are: a buy on Infosys. We advise high-risk traders to accumulate the stock in the range of Rs 3,020 to Rs 3,035, with a stop loss to be maintained at Rs 2,985 for a target price of Rs 3,135. And a buy on Aurobindo Pharma. We advise buying the stock above levels of Rs 1,253 with a stop loss to be maintained at Rs 1,220 for a target price of Rs 1,320. The derivative strategies are: long Exide Industries December future in the range of Rs 161 to Rs 163 for a target price of Rs 169 and the stop loss is to be placed at Rs 157. And long Indraprasth Gas December future in the range of Rs 319 to Rs 321 for a target price of Rs 330 and the stop loss is to be placed at Rs 314. Thank you and have a great day ahead.